Hello, my name is Evan, and welcome to Economics 101, your number one source for everything economics. What if I told you that America's foreign policy isn't just about democracy or defense or diplomacy, but it's mostly about money? I think we kind of already knew that, but I'm not talking about money in a conspiracy sense, but in a very real economic sense. Okay. Today we're breaking down how U.S. foreign policy decisions directly shape a couple of different things. The first thing that we're going to talk about, government spending and national debt. Okay. Second thing, we're going to talk about energy markets and inflation. And the third thing, we're going to break down a global trade, supply chains, and we're even going to talk a little bit about cost of living. This, this isn't talking about, Republican, Democrat, red versus blue. It's all about dollars versus cents. It's not about who got voted in to be president or any of that. Because if you follow geopolitics or not, you're paying for it regardless. Okay. I want to give a brief intro into foreign policy so that my viewers can really understand what's going on in the Middle East. But before we get into it, please like, share, and subscribe this video. And let's go ahead and dive in. So we're going to start with something real simple. War, alliances, and global military commitments, they all cost money, right? They cost a whole lot of money. The United States maintains hundreds of military bases overseas. It funds international security commitments. It provides military aid, economic aid, logistic support, and all of that is not cheap. That is very, very expensive. Every dollar allocated to foreign intervention overseas security is a dollar that must be either three things. It must be taxed, it must be borrowed, or it must be printed. I'm going to say that again. Every dollar allocated to foreign intervention or overseas security is a dollar that must be taxed, borrowed, or printed. Okay? So when we have to borrow money, it increases the national debt. When we have to print money, it affects inflation. When the money is taxed to go overseas, it reduces private sector spending power. Now, here's the important thing on that, all right? Defense spending isn't automatically bad for the economy. In fact, when you have defense spending, it actually stimulates certain sectors like aerospace, defense manufacturing, logistics, cybersecurity. So those sectors actually receive a benefit from the spending. And you have other sectors also. But the economic question isn't whether it stimulates our economy, it's whether it's the highest return allocation of capital, or simply put, it's the best bang for our buck. What do we get for our money? What do we get for sending $1 million missile over to Iran? Or what do we get from fighting wars or spending or having a defense budget, spend all that money or go towards foreign affairs? The best bang for our buck. Does any of it increase productivity? Does it increase GDP per capita? Does it improve long-term growth? Or are we just kind of paying to maintain our position, our geopolitical position? Where's all the money going? And what is it doing for me and you, basically? All right? Governments, just like businesses, they face opportunity costs. And when foreign policy commitments expand without clear financial accountability, those opportunity costs grow. That's kind of the first economic layer most people kind of miss. All right? Foreign policy is fiscal policy. A good way to look at it to make it understandable. Foreign policy is fiscal policy. All right? So we're gonna move and talk a little bit about something that's closer to home, something that I know everybody can understand, and something that's currently affecting us right at this moment. And this is March 9th, 2026. So every major geopolitical conflict affects energy markets. All right. Oil only cares about supply and about risk. When there is instability in a major oil producing region, future markets price in uncertainty. Okay? That uncertainty drives up crude prices. And when oil rises, transportation costs rise. When transportation costs rise, food prices rise. Manufacturing prices go up, airline tickets go up. It's just the direct effect of basically supply and risk. Foreign policy decisions that increase tensions in energy producing regions have direct economic consequences, even sanctions. Okay, briefly talk about sanctions, which are often seen as a diplomatic tool. Sanctions can be used as weapons. When you sanction a country that exports oil, you're constricting the global supply. Okay, that can strengthen domestic industries in some cases, but it also is going to raise the price globally. All right, energy independence becomes more than a political slogan. It becomes a macroeconomic stabilizer. All right, you'll hear us say we're 100% energy independent, or you'll hear a country say they're energy independent. All right, if your economy depends on energy imports from unstable regions, prices are partially tied to conflicts, and here's the deeper point. Markets hate uncertainty. When foreign policy appears unpredictable, investors demand higher risk premiums. Bond yield rises, equity markets fluctuate, the dollar strengthens or weakens depending on perceived stability. Geopolitical instability isn't just a news headline. It's a volatility priced into our financial markets, okay? An example. What's going on right now? Strait of Hormuz has been, it hasn't been shut down, but countries are not sending their oil tankers through because of the conflict going on with Iran and the U.S. and Israel. Oil price, the supply, that constricts the supply, that pulls back on the supply, that means the price is going to go up. Okay? That means the price is going to go up. That's basically what's happened. You can look at the gas pumps. You can look at crude oil. Crude oil today was almost approaching 100. I think it's down a lot right now. However, Strait of Hormuz, like I say, hasn't been shut down, but oil tankers are not going through, constricting the oil supply. Price is going to go up. For decades, U.S. Foreign policy supported globalization. Right? We're gonna shift to talking about globalization real quick. And just what is globalization? Globalization, it is connecting economies. Real simple, connecting economies, all right? So because global trade lowers consumer prices, when supply chains stretch across borders, companies reduce costs. Lower production costs can lower retail prices, at least in theory. But here's where things get a little complicated, all right? Competition within globalization leads to reshoring, tariffs, and export controls. And that shift has economic consequences. Tariffs are effectively taxes on imports. Companies either absorb those costs, which reduce profits, or they pass them on to consumers. Which one do you think happens? If you guessed pass on consumers, you are correct. More than not, that cost is passed on to you and me. All right? So when foreign policy shifts from countries getting along to countries competing, global efficiencies decline. So what is the bigger overall picture? Okay? When we step back, when we step back and we look at our foreign policy decisions influence federal deficits, okay? They impact inflation. And I'm going to go into these a little bit more in detail, but we're just doing a recap, all right? Foreign policy influence federal deficits, impact inflation, shift energy markets, and they move the stock markets. I don't know if you've been paying attention to the market and seeing what's happened with the volatility that's going on for the past weak within the markets, both in crude oil as well as your major indexes. But the stock market is moving. It's lost a lot. I think today it was up finally, but again, you're going to continue to see that volatility in the markets as long as we have conflicts in the Middle East. So if a conflict expands, defense contracts may rally, but consumer confidence may fail. If sanctions tighten, commodity prices may spike. But domestic producers domestic producers may benefit from that, right? If alliances strengthen, trade may increase, but domestic competition may also increase. Everything has a cost. Everything has a trade-off. The question is not whether foreign policy should exist. The question is, are we calculating those economic consequences clearly and honestly? All right? Everything comes with a cost, but are we calculating those consequences clearly? We need to really be able to understand exactly what consequences we're dealing with and how we're going to go about dealing with it. So what does all of it break down? What does all of this mean? How should you think about this as a viewer, as a investor, or as a small business owner? I'm not giving you financial advice, and I'm not telling you what to do. But in my opinion, the first thing when it comes to globalization, what you should do is you should watch energy markets. They're often the first signal of geopolitical stress. All right. Second, pay closer attention to deficit spending as it relates to globalization. All right. And the third thing is to really try to understand that supply chain restructuring from conflict more than likely is going to mean higher prices for you and me on certain goods. All right? This isn't about panic, but this is about awareness. All right? Know that when you have conflict overseas, that affects you and me. All right? Know that foreign policy is not just something that's happening over there. I know how people it's happening over there, so they're not worried about it. It's not just happening over there. It's going to show up in your mortgage. It's going to show up in your grocery bill. It's going to show up at the gas tank. It's going to show up in possibly in your retirement account. So it's not just something that, yes, it is happening over there. And, of course, we're not here in the U.S., we're not getting bombed and we don't have to experience that, but we experience it or we deal with the consequences in other areas, okay? The strength of the dollar and the more globalized the world becomes, the more intertwined the systems are, okay? So just my closing thoughts, and pretty much, again, just the reality of what's going on right now, what's going to be going on in the near future. No nation can fully isolate itself economically, all right? But also no nation can ignore economic consequences either, right? When foreign policy expands, spending expands. When conflicts rise, volatility rises. When trade shifts, prices shift. That's just how it is. And as voters and market participants, we should be asking not only is this morally right? I know that's a question. Is it just the moral thing to do? Is this strategically sound? But also, you can ask that, but also ask. You should also be asking what does this cost me? Like what does this cost my family? What does this cost my country? What's the long-term return? Okay? Who ultimately pays? Those are the questions that you know what I'm saying? That everybody should be asking. If you found this breakdown helpful, please hit the like, hit the subscribe, and drop a comment below. I really want my viewers to understand that the conflict between the U.S., Israel, and Iran has just started. You can just see in the first, I think, 10 days how much this has affected our gas prices, but also you have to understand for the long term how this is going to affect us. So please, drop a comment. Do you think America's foreign policy strengthens or strains our economy? Let's talk about it. If you'd like, if you like more videos like this, please leave that in the comments, share, and before you leave, like, share, and subscribe. I thank everybody for viewing, and I will see you next time. Thank you.